So glad you could join us here on a Monday. I'm Marlin Bohling with you, your tour guide to the ag commodities, and my co-pilot right now is Chris Swift of Swift Trading Incorporated, based right here in Nashville, just down the street. I'm looking at the Dow right now. It went down about 11.5%, and now it's down about 10%.
Well, good.
Bouncing a little bit. It is down 2,315 points right now. Just amazing times we live in. Who would have thought that? And that's almost a normal move anymore. Let's see what the grain markets are doing. We'll start with the corn. And on that corn market right now, we're still lower. We're trading May down 7 at 358 3/4. We have that new crop December contract down 4 at 369. It's about a penny or so off of its earlier low this morning. Let's check out our soybean trade. And right now on the soybeans, you have your May down 8 1/4 at 840 1/2, and November new crop down 6 3/4. It's at 857 3/4. I want to stop right here. I guess if you look at it in the form of percentages, corn is making a bigger drop than soybeans are right now.
In percentage-wise, it does look that way, doesn't it?
So what does that mean? Anything?
Oh, I don't think anything at all.
No? Just the way it's...
I don't think these markets right now are really looking at anything as far as congruency goes, and they're trading off the seat of their pants right now.
Congruency, good word. We are looking at contract lows, right?
Yes.
In corn and soybeans.
Corn and soybeans, and not far from wheat now.
Let's look at wheat. Yeah. Okay, let's take a look at Chicago. And on the May contract right now, well, we're down 11 at 495 on the low of the day, and July on the low of the day at 497. So that's down a dime. Remember, Chicago wheat has been trading at a big premium to the Kansas City wheat. Let's see what Kansas City is doing today. And here it is down 9 1/4 on the May at 422 1/4. July down 9 1/4 at 429 1/4. So even though it's down 9 1/4, actually it's narrowing the spread by a penny today. Yeah. I mean, you know, looking for silver lining here. Let's look at Minneapolis wheat, and right now on the spring wheat trade, you have September down 2 1/2. Let's talk about this for just a little bit here. On the corn market, we have been talking about the fact that it's going to be a wet week. Nobody seems to notice that part right now.
Right.
Do they not remember last year, that wet spring we had?
Well, and I know they do, but apparently that doesn't make too much for prices, because all through the spring we only had about a 45 cent rally in the corn for about all of 2 weeks, and then for the rest of the time period we traded sideways to lower. So I think a lot of it is being masked because of the current situation with the coronavirus. And I did hear my friend Dewey talked just a few minutes ago about looking for a bottom in that, and I can't really disagree too much, because grains seem to be a little bit more insulated against this situation because they're not very perishable. They are very storable, and there has to have quite a bit of processing done before they go into human consumption. So unlike meats and spoiled items, fresh vegetables, where we really do need to get those to market the quickest, then I don't think grains are just going to be that much impacted by the current situation. And maybe we do begin to see enough weather patterns come in here where it does hamper enough of the planting to push some prices higher.
I was thinking in a bygone era when you and I were younger.
When was that?
Long time ago. It used to be when you had total chaos in the financial markets like that, sometimes investors would kind of seek out maybe grain markets just because of what you said.
Well, and that's true, and they might still be today to some extent. It's just the overbearing amount of selling. And in all honesty, this is really more about money than anything. We have caught a lot of the industry by surprise. Nobody dreamed 3 weeks ago that we would have this kind of turmoil in our society, and that's the way I look at it. I believe it's more psychological than it is fundamental, and we're just in a turmoil time frame, and it'll take a little while for people to get settled down. But I will say this was very interesting to me. The efficiency of our transportation and distribution system is phenomenal. Think about how well we flowed prior to this, and when we wanted a fresh vegetable, we walked right down the street, got it, and so there's nothing wrong with our transportation distribution system.
Absolutely. Hats off to farmers and truckers everywhere right now. We'll come back in just a moment, and you want to talk about psychological trading, we'll talk about livestock when we come back. There you go. Chris Swift was talking earlier about psychological market activity. Well, let's look at that livestock trade here. Let's go to live cattle and get updated here. Lock limit lower, expanded limit lower across the board. The market remains that way. Although you were mentioning, Chris, when you came in a little bit ago, you saw a few trades here and there kind of sneak in today. So it's not like it's totally locked up, but for right now, it appears that it is. All right, now let's take a look at our feeder cattle market. Now here we also have a limit of $4.50 today because it's not expanded. And they are using it. Everything $4.50 lower at the present time across the board on the feeders. On the lean hogs have a limit of $4.50 today because of expanded limits, and all the contracts are except for the nearby April. Now that one's down 305 at 53.33, so a little bit of trading going on in that April contract. What does it all mean, Chris? What do we do with this?
Well, we're having to stifle traffic. So if you think about the hot dogs, hamburgers, and foods that did not get consumed at any of the venues, sports related or social media gatherings, anything like that, those trucks have now stopped. The trucks in behind them have stopped, and the trucks at the distribution center have stopped because there's just nowhere to go. So we have to get our government agencies to begin letting people get out. And if they get sick, some of them will get sick, but to constrain our society in this manner is causing more panic, which is doing a whole lot worse than anything this virus could do.
All right, I got to point something out here.
All right.
On the way home from work Friday, I stopped at one of the big box stores. And everybody's talking about how there's no demand for meat. There's no demand whatsoever. And I went into the store.
Cleaned out.
There was no chicken.
Yep.
There was no hamburger. There was no pork chops.
Right.
No ham. All the frozen meat, all the frozen burgers, the frozen sirloin burgers, everything was gone.
Right.
That doesn't tell me that there's no demand. I mean, they bought up everything in sight.
That is true. But we consume approximately 45% of our meals outside the home. 55% of them inside the home. Now we're fixing to take that percentage significantly lower. So we are going to be eating more meals at home now, and that's where we see the impact for the equities markets, because a lot of those restaurants are publicly traded companies. So if they're not out there selling hamburgers or steaks or whatever their main course is, then they're not going to be generating revenue.
Well, okay. I say let hamburger lead us to victory.
There you go. So. I'm all for you.
All right. Well, thanks for coming in.
Absolutely.
I appreciate it. There will be brighter days ahead, I'm
yes,
sure.
sir.
All right. Chris Swift of Swift Trading Incorporated right here in Nashville.
All right. Thank you very much. Always good to see you, Chris.
Absolutely,
Sure appreciate it.